We have with us Manisha in the studio. Manisha, all things commodities.
All things sugar, by the way. I mean, the way the sugar prices have been in the international markets and the way the sugar stocks have been surging, it does tell you that perhaps some policy and reform is in the markets, is in the works. And that's exactly, or something that the street is actually anticipating. We are then joined by Atul Chaturvedi, Executive Chairman, Shree Renuka Sugars. Mr. Chaturvedi, hi, thank you so much for joining us. First of all, on MSP, because that is what the street believes can be the first reform that we can see from the government. The expectations are quite on the higher side. What are you hearing and what is your sense? Because in the last 4 years, we've seen FRP being continued to be hiked, but not the MSP.
No, in fact, the industry has been asking for a revision of MSP or minimum selling price, essentially to make this as a kind of an institutional, rather institutionalize the whole process. Because FRP keeps getting increased and the minimum selling price doesn't move. So if this is increased, then it will send the right signal, and it will also give the signal to the farmers that their money is going to be assured in future, as the industry is not going to lose money. So I think this message, hopefully the government will probably revise this. So we are quite.
Mr. Chaturvedi, what is your sense on what is the industry asking for? Because the current minimum selling price is 31 rupees a kg.
In fact, if you really, the industry has been looking at something like 41 rupees as the price. So we just have to see whether, and this is all ex-factory. Whether this happens or it doesn't happen, we still are watchful. But I think some action is definitely looking to be on the cards.
All right. Mr. Chaturvedi, one, of course, is the sugar minimum selling price. The other is very bullish statements coming in from the Ministry of Petroleum and Gas, where they have talked about the blending on track, 15% already done in the month of May, and on track for 20% blending. That sends a very bullish signal for overall sugar as a sector. What are your numbers, and would you also say that 20% is on cards now by the end of next year?
In fact, this announcement by the Honorable Petroleum Minister has actually come as a whiff of fresh air. In fact, in December, when the cane juice ethanol and B-heavy ethanol was banned for making ethanol, so we were all very disappointed, and the headwinds were pretty high because sugar production was going up and it was adding on to our interest burden. But now this statement reaffirms that the government has not put the plan on the back burner, and the government is committed to ensure that the Prime Minister's target of achieving 20% blending by 2025 gets achieved. And I'm sure the kind of thrust which the new minister is giving and the kind of signals the new minister is giving definitely augurs well, not only for the sugar sector, but for maize as well. And if we look at the numbers this year they were expecting 825 crore liters to get 15% blending. As of 31st of May, almost something like 327 crore liters has been supplied. And the big change is that grain ethanol is now competing strongly with sugar, and it's a kind of 50-50 ratio. So I think all this is good signals, and it should be helpful to the sugar industry to cut down on their interest burden.
So while both of these things are quite bullish and in works perhaps, and that's exactly where the sugar stocks seem to be reacting with, do you think that this would be a part of the first 100 days, the sugar minimum support price, and of course, long-term pricing policy for ethanol?
So what is more important and at this point of time is that the industry has been asking the government to increase the price of ethanol which was supplied to the OMCs till now. So that needs correction. And as the FRP for the new season has already been announced, increase in FRP. So it is imperative that this is also done for next season. So what the industry is anticipating is that the price of cane juice ethanol should be more or less in tune with what the government is giving for maize-based ethanol, which is about closer to about 72 rupees, which means an increase of about 7 rupees from the current price. And similarly, the B-heavy ethanol price also needs to be jacked up in the same proportion, which would mean that it will now become something like 65, 66 rupees or thereabouts. That's the industry's requirements and demand. Let us see how things pan out as we go forward. And I'm sure some action is likely to be taken.
right.
Yeah.
Action is likely to be taken. That may spell decent news for the space, and we're seeing decent traction in all of these sugar stocks as well. Thanks a lot, Mr. Chaturvedi, for joining in, and Manisha for taking us through that conversation. We'll wrap up on this note from Halftime Report, but stay tuned because Business Lunch will take all the market action ahead.